Hey guys, welcome back to the Results Junkies podcast. Paul and I have both been out of the country on separate corners of the world, and we are back into the U.S. and strapped into our desks to talk about AI, what annoys VCs about their founders and what they're spending money on, and then if we get a little bit of time, we'll talk about Google and the potential for sale of Chrome. Mr. Singh, welcome back to the U.S. How are you?
Technically, I never left the U.S.
I thought you were in the British Virgin Islands. Oh, okay.
Oh, I took a day trip up, but we were in the U.S. Virgin Islands for the week.
My deepest apologies, sir. My deepest apologies.
Get it right.
Well,
No,
while you were sunning yourself, I was working hard in Lisbon and eating lots of pastry.
I was going to say one of us looks more tan than the other, but then again, that's every week, I think.
Check, please. You can say that. I can't.
Yeah, but Lisbon sounds fun. What was going on up there?
It was Web Summit, and I think we've reached peak craziness for Web Summit. The numbers I heard were there were 70,000 people attending, and like I remember when I used to go when it first moved from Dublin to Lisbon, and it had definitely outgrown Dublin. And while it was a big conference, it didn't overwhelm Lisbon in any sort of meaningful way. Every food truck inside the venue had a line 30 people deep when it was time to eat. So that made it sort of cumbersome. I actually left the show and went to a local shopping mall to eat and come back because it was quicker. I mean, there were interesting conversations. I sat for more sessions, if you will, listening to folks talk and caught some interesting perspectives on, funds that are part of funds that are part of funds and stuff like that. And just some interesting things about the way people are investing. But it's just, it definitely has gotten to the point where with so many people there, it's not just that you can't see all the companies, which there's 6,000 startups that pitch there. So you're never going to get through, 6,000 startups for sure. But because the rooms are more crowded than they've ever been, it just makes it harder to move, if you will. And so there were whole aisles I just never bothered to go down because they were so crammed with people. So, and I'm sure I could have missed a good company, but
we didn't talk about this in the pre-show, but I am curious, when you think about, so if I was watching your schedule or your location while you were there, what would you say you spend the majority of your time doing there? Is it sort of walking the aisles and seeing what the startups are doing? Is it hanging and listening to the keynotes? What is it? What is your sort of MO for Web Summit?
Yeah, it sort of pivoted a bit. In the beginning, it was almost always about looking at startups, and then it started to pivot a bit more to let's get the contour of the room. So what are most companies trying to shoot for, and are there themes there so we can understand from an investing standpoint? And I think the last couple times I've moved a little bit more into the keynote side, but I'd say to me the most important bucket right now is really understanding what the lay of the land looks like, if you will. Yeah. And as you can imagine, AI was everywhere, but it was if I just walked away from Web Summit trying to come up with a cohesive statement, it would be I can't figure out how to invest in the current version of AI startups and win, because so much of what they're saying that they're developing sounds really, really similar, and it's unclear how they're going to use AI to get an advantage. I mean, there's so much compute out there. Yeah. It's really hard to tell, if one company can accelerate quickly with a developer or two plus, all the other stuff. What's your moat, if you will, because everybody has access. Not everybody, but I mean, it's not hard to get access to these resources if you have the money. So it definitely gave me some pause about how you would invest. And I think it's tougher to figure out. One of the things you used to always say in the tech tour was, the niches get the riches. It's hard to figure out what the niche is right now.
Yeah. It's interesting to hear you say that too, because I don't disagree. I was at a health related industry conference a couple of weeks ago, and I thought it felt tired. See, I feel like I'm going to get in trouble here. I feel like it's become so fashionable to talk about AI that nobody really knows what that means anymore. And so as an investor, that makes it very difficult. So I echo what you're saying there. And as an operator too, it makes it very difficult to kind of figure out how to what really should be in or out of your strategy for the next year or two. It seems like everybody's just asking, what's your AI strategy? And it's like, how much time you got?
Right.
So Okay, so I won't pepper you too much on this, but any other big surprises though when you were out there?
Not big surprises. I mean, I would say I certainly expected to see a lot of AI stuff. I think, if anything, it was stopping and listening to a handful of companies and having them not be able to enunciate, really well what their, for lack of a better term, what their secret sauce is.
Yeah,
And I
yeah,
feel like, I don't know. I mean, maybe this is just me being old and curmudgeonly, which I'll certainly own. But I just feel like startups were better at enunciating that,
yeah.
5 or 10 years ago. And when I would ask questions about, well, what about this or what about that, and what makes you different, and a lot of it just came down to saying how they were going to be faster and more accurate, and things that sounded, in another vintage Paul Sing term, very hand wavy,
Yeah,
not very not very specific on how they
yeah,
were going to be better than everybody
yeah.
else. And I think, like, if we get to talking about Google and Chrome today and all that stuff, I think, when we think about search and how that impacts a lot of these companies and paid search and ads and all that stuff, it's obviously more expensive for these companies to acquire customers. So if you don't have a definitive standout product and you don't have a great customer acquisition channel, it's not that you can't grow, it's just much more expensive.
Well, I won't take you on a side quest here, but if and when we get to that whole Chrome thing, it does it does change even the way I as an operator think. There's we're throwing money, for example, part of our paid budget goes to Google Ads, but what does it mean if ChatGPT search is more successful? And some of their new browser plugins seem to be getting some pretty good adoption, and I mean, I'm even trying it, and it makes me wonder, like, what does this mean for my ad budget?
Yeah. Yeah, well, quick bit of housekeeping just before we get into it. Show at resultsjunkies.com is how you find us. He is at Paul Singh on all those social media channels. I am at Pizza in Motion. And let's get started on this article that we talked about. This is a TechCrunch article, and it talks about, I'll read the highlight, the headline, because I think that probably frames things up. Executive assistants, high salaries, and other ways early stage founders will trigger a seed VC. And so high level, what the article talks about is how, and now that we're past the halcyon days, if you will, of very free cash for startups, that some of those freewheeling tactics in terms of how startups spent money are starting to come under more scrutiny by VCs. And when I mentioned this to you, you had some pretty quick, concise thoughts on it.
Well, I think, when you look at, we'll post a link in the show notes. I mean, first of all, it started as a snarky tweet, and that's how these things go, and half of every snarky comment tends to have a little bit, half the truth in there, baked in there somewhere, right? So in the article, they talk about how it was a particular seed VC who talks about how there's certain red flags she doesn't like and stuff like that, and some of it I agree with, some of it I don't, but
Sure, right.
the thing is that there's a nuance here, and that is the optics. It's if you're an early stage company and you're out there on the fundraising circuit and you're about to pitch all these people for money. I think the thing is, and we've said this on the tech tour as well, the tricky part is that you don't know how many other deals that investor is seeing in a given time period, and so the ironic thing is you got to try to figure out how to be the least worst, not the best. And so in this case, it's like, the snarky part is, hey, you probably shouldn't have an EA scheduling your meetings, right? But again, the flip side of that coin, because there's always truth to some of this stuff, it's really difficult as an early stage investor to talk to anybody other than the founder, because you're really taking the bet on that founder, and anything that gets in the way is tricky. You can't have I don't know, pick some other role in your team. You can't have somebody else on your team doing most of the talking, doing most of the scheduling and all these things, because ultimately we want to talk to you. Now, here's the other side, the nuance of it. There's other tools you can use. You could use things like Calendly. I mean, I think Google's Calendar has a similar thing now. Like, there's a lot of other things, but I'm kind of rambling here. But the point is, though, is that you don't want to look like you're spending the money on foolish things, especially when whatever money you're about to raise is only going to last you 12 to 18 months. So let me pause there, because I can kind of keep going. But you mentioned something in the pre-show where you said you have some thoughts. You may not necessarily agree with me or the article. So let's see where that goes.
Yeah, and before I forget too, I do want to drop in a quick comment at some point. So I had a surprise meetup with one of our founders that you and I are both invested in. So more on that in a bit, because I didn't share any of this with you, but it definitely came out of left field. So I would have agreed wholeheartedly with this article prior to a handful of months ago about, frivolous spending. But, I'm going to use an example from our portfolio, somebody we've talked about the last handful of weeks. That's Julian from PointsPath. And he's a single founder with a very small team of developers and no real dedicated admin people. And when I think about companies that are structured like that, I also think of something that I took advantage of a handful of months ago. So we're investors in one of the launch funds that Jason Calacanis launched. And as part of that investment, I learned that we have an investment in a company called Athena, which is a virtual assistant company. Now, virtual assistants have been around for a long time. People in other areas of the world where they can support founders, CEOs, all that stuff. What was unique about Athena is that they were focusing more on folks that were college graduates, in some cases master's level program graduates, who had a bit more firepower, if you will, than some of the offshore resources I've used in the past. I will tell you, delegation is my kryptonite. It's I think you've seen my number of unread texts and emails and all that stuff, so you can fairly tell that way too much stuff comes across my desk. And while I'm still struggling to figure out the absolute right way to use my Athena, her name is Evie, they've opened my eyes to some things on delegation in the first 2 or 3 months that really have me thinking. And the reason why I say that is, the cost of an EA through Athena is $3,000 a month, and it's a switch on, switch off sort of system. So you're not making a year commitment. There's no taxes, human resource element, any of that stuff. It's $3,000 a month. And so I think about where standard, raises are for founders. I could see companies, I'll use Julian as the example, where they don't have a co-founder or they don't have a larger team, and $3,000 a month to have somebody work on other systems other than just setting up meetings could be helpful. Because I have Evie doing things that are much more involved. We have her categorizing customer complaints and pulling reports and doing, more high levels.
Is Evie a person?
She is. She's a human being who lives in the Philippines. Yeah. Okay. She's a college graduate, lives in the Philippines. And, excuse me. And so we've trained her to say, hey, here's how we want you to follow up on customer complaints. Here's how we want you to assess, gift card transactions, stuff like that. And it's really got my wheels turning on the price of a human resource in the U.S. versus the price of an educated, trained human resource offshore, and how they can free up time for a company. And so it's just a very interesting model that I hadn't thought about in the past that I think for founders, could make a big difference.
It's interesting. So now I'm going to maybe double back and speak from the other side of my mouth. As you probably know, or you probably more than anybody know, my background's primarily been just either bootstrapped or early stage venture. And for any of my own companies, I've just always bootstrapped it. That's just how it was. Right. And then this particular deal with Strata, this is my first interaction with a private equity firm. And I will say one of the personal learning curves that's been very steep is trying to navigate some topics like this. So for example, just to kind of cut to the chase, I'm less inclined to, so when I think about the difference between an EA, an executive admin versus a chief of staff, if you asked me this conversation or had this conversation with me, I don't know, 4 months ago, I'd be like, both are probably irrelevant. Let's just get it done. But where I'm at now, 4 months later, it's kind of like, okay, there is a difference between an EA and a chief of staff. And I want a chief of staff. I would actually probably not look down upon somebody that had a chief of staff and is fully utilizing them hardcore, because for example, a lot of the financial planning and audit stuff that I do probably more often than I'd like to admit now, having a right-hand person that not only can the scheduling is so low value, I don't really need that. I mean, there's tools like Calendly that I use for that.
Yeah.
This is really more like, hey, double check my math on the gross margin last month. Are we good? Hey, go back to our top 25 vendors and see if we can negotiate annual discounts or something like that. Those are things where I don't think that I would feel comfortable yet giving them to an Evie. I'm sure she could do it. But but like having a chief of staff kind of role where it's like somebody that can actually be an extension of me is turning out to be very, very useful. And I think going back to this article, if I could genuinely see, I think there's a subtle but very important difference between a founder playing startup and a founder maximizing their time on things like go-to-market, customer acquisition, things like that.
Mm.
And that if I can look the other way, I'll say this assertively for myself, I can look the other way if everything else is working.
Right.
But the minute it's not, the minute you're out there saying, gosh, I wish I could raise money for my prototype, and I look over and I see you got 5 C-level people for a team of 6, then it's kind of like, okay, what are we doing here?
Excuse me. I think it's a very valid point, and I to your point, I think it's definitely a nuanced issue. I would just say I think I've started to look at this a little bit differently, because to your point, I don't use her for scheduling. I use Evie for, she's gone into my inbox and tackled it and created, separate inboxes for separate things. And she prioritizes mail when it comes in, and she flags things for me in Slack and says, hey, did you reply to this email? They're looking for you to release the order for XYZ. And so, maybe she's not perfect at that today because she's only been with us for a few months, but as time has gone on, she's learned what's important and what's not.
Yeah.
And so to your point, maybe she's not quite at that chief of staff level, but certainly the chief of staff level has a high amount of value. And so if you could have a fractional chief of staff or a lesser chief of staff, is that worth $3,000 a month? I don't know. To your point, how much did you raise? What else are you wasting money on? Wasting the wrong word, but what else are you spending money on? I just, I've started to open my eyes to the fact that an EA may be a good use of funds for a founder.
But for the kind of company, I'm going to put you on the spot here a little bit. So for the kind of companies that you and I tend to look at, and just to set this up for anybody that's new around here, it's like the companies you and I are looking at typically have less than $1 million in annual revenue, often less than $100K in annual revenue. They might be right after the prototype stage. You might have 1 or 2, maybe 3 customers. Like, it's very, very early. So all things being equal, what are the red flags for you? When you look at N number of companies, and again, for the moment, put aside customer acquisition, just know that like that's a given. They're very early stage. They really should be focused on customer acquisition. So when you think about it, what are the red flags that as they're talking or, you're interacting, like things go sideways and you're like, whoa, what is that? Does that make sense?
Yeah, I think it depends on whether they're B2B or B2C, because I think it's a very different sort of customer acquisition. And I also think it depends on how deep they are into SaaS, because the more they're into SaaS, the more it's about being able to leverage either, code or ads to increase that customer acquisition channel significantly. Whereas the longer the sales cycle is, the more the burn becomes important. I was meeting with a portfolio company recently where their sales cycle can be up to a year. And so to your point, having a sales force, no pun intended, that's very, very pricey when you know that the sales cycle could be up to a year, requires a very different fundraising strategy. And I think there are absolutely companies in my portfolio that I believe need that, but I think that's a very tough thing to raise against today versus 5 years ago. So I think that's a big key for me. I also, just personally, while I do believe in decentralized teams, and while I do like the idea of making sure teams can get together periodically, I think spending large amounts of money on meetups and retreats is something I struggle with in the early days, because it's sort of like you got 2 choices. Either you're going to build a decentralized workforce, or you're going to have everybody together as a team. And so if you're going to go with the decentralized workforce, then I think any sort of meetups need to be very tightly focused on how do we grow, because you're not getting that those daily collisions in the office, if you will. And so I think I struggle with some of that.
Yeah, it's interesting. Yeah, I mean, I think it'll be interesting to see what happens over these next couple quarters. I mean, at the time of us recording this, I think the Fed has dropped the rate twice now in the last, I can't even remember, last 6 weeks. It feels like maybe 8 weeks. Yep. So all other things being equal, I would expect the trend to continue downwards. I mean, we're heading into a new administration. Maybe it won't, who knows? But the point is, I think for founders, I mean, it's been extremely tough to raise money. I mean, I know I've been very selective about what to invest in the last 2 years, 3 years. but maybe the tide's going to change over the next couple quarters as it normally does. We're at the point right now where investors hold a lot of the power. And 2020-ish was really that time when founders had a lot of sway, and we'll get back there. I mean, everything's cyclical, right?
Yeah.
So it'll be interesting to see like how things kind of change. But for now, where we are today in the cycle, I think discipline's the key. I think you do have to pay attention to optics and the nuance. I think if anything with this conversation, it's the nuance that matters. Like if you're blowing money and not going anywhere, that's a lot worse than, hey, why do you have a team of EAs and chiefs of staff, but hey, you're adding 4 or 5, 10 new customers a week? That's very, very different.
Yeah. Exactly. What is it freeing up your time to do? If there's, industry conferences you can go to where you can increase the speed that you can sign leads, then, that could make it worthwhile. And if you're not drastically increasing the speed of your sales cycle, then you've got to do everything you can to conserve resources in between.
That's right.
Especially if you're a hardware startup, because hardware startups, I think almost always have longer sales cycles in terms of staging stuff on shelves and things of that nature.
And just
moving
the capital
product from
outlay
overseas.
is very different too.
Yeah.
I know we're short on time. Let's you want to touch on this next one real quick, and let's see if we can even maybe it's going to be the segue into the next episode. We'll see.
Well, I actually, if you're okay with it, I'd say let's pin Google and Chrome if you don't mind.
Yeah, that's fine.
And I'm gonna tell you a very quick story about one of our founders, because I think it goes to the core heart of like, you've always got to be selling. And I think the Google Chrome thing is very interesting, but I don't think we can cover it well in the next 5 minutes before you've got to run to your meeting. So I'm in Las Vegas, and I get a call from my business partner Russell, and he says like, "You're never going to guess who I'm having dinner with tonight." And he goes to this dinner every month in Vegas. It's the Oscar Goodman dinner. So Oscar Goodman was the mayor of Vegas. His wife is currently the mayor of Vegas. He was a mob lawyer for decades. And so he's
I don't know where this is going.
He's a very salty character. And he was in the movie Casino, Joe Pesci and De Niro and all that. And if you Google Oscar Goodman, anybody's watching and read about him, he's just this myriad of tales of, you're like, this stuff can't really be true. And so he does his dinner once a month down on Fremont Street at the Plaza at Oscar's Steakhouse, and he answers questions during dinner. And people can ask him.
He's there.
He's there. Yeah, during dinner, and so you can ask him any question you want about what mobsters he represented and stories he knows and how crazy was it back in the day and the whole bit. And so, like I said, it's open questions, and I haven't told you who the founder is.
I'm waiting.
None of this will surprise you. And by the way, like, I'd never met this founder of ours in person before. Talked to them on the phone a number of times. Also did some video stuff with them. They interviewed me for something that they were doing. And so I missed the question, unfortunately, but Russell shared it with me afterwards. So they asked the audience if there are any questions, and this founder says yes, and grabs the microphone and says to Oscar Goodman, mob lawyer, the whole bit, "Did you know that, 12 of the biggest 20 casinos in Las Vegas supply free feminine hygiene products in the bathroom?"
I know exactly who this is. Of course she would do this. Okay, go ahead.
And I'm wondering why the casino we're in today isn't a part of that. And everybody in the room looks around, and this is
incredible. This is exactly what she would do. Yes.
100%. That's so
good.
Claire Coder, CEO of Aunt Flo. She's a kick-ass, take no prisoners CEO. Yeah. And she just decides in this moment, rather than doing what everybody else is going to do, she is going to self-promote Aunt Flo. And the interesting thing about it is Jonathan Jossel is the CEO of the Plaza Hotel. He's a smart, young CEO. And he's sitting there with his wife and another woman afterwards. And he's honestly asking, "I don't understand. What's Aunt Flo?" And so he got a lesson from them on what Aunt Flo was, the term. And then he sat down with Claire, and he walked away from the table going, "Okay, like, I need to have somebody look into this." Yeah. And that is the barbarian CEO, Claire Coder.
As you said the question, I'm like, that's exactly who that is. Claire, yeah, I mean, Claire is crushing. I mean, the business is doing really well. I mean, we met her on the tech tour when we were in Columbus, Ohio. I remember that one. It was Columbus, Ohio, probably 6 years ago. I'd have to go look at when we made that first investment, but she's crushed it, and she's done it with a very lean team too.
Yes, yeah.
I think they're probably a total of less than 20 probably. So, but she went through the ups and downs of the supply chain crisis, and just like everybody else. But she came out the other side of it.
She pivoted. I think one of the things I find most remarkable about her is she went from being a feminine hygiene. Rewind. So her key back then, when she first launched the company, was there were a number of states that had mandated free feminine hygiene products in schools. Sort of like the free and reduced lunch program. There are many women that don't have access to feminine hygiene products. It's a real health issue.
Yep.
And so she decided that she would make it easy for school systems to comply with these laws by buying that product from her, and they would auto ship it in, and they knew how to set it up in the bathrooms and the whole bit. They made it easy. And then COVID happened, and a whole bunch of schools closed, and nobody needed the product that Claire was selling because kids weren't in school. And so she pivoted and turned herself into a PPE company essentially overnight. Yep. Masks and sanitizer and all that stuff. And, just like anything she could to save the company and make it through. And now she's on the other side and she's thriving. And I knew you wouldn't be surprised when I shared the question with you and how she addressed the room.
Good for her, though. That's awesome. That's awesome. Yeah. I'll have to send her a little note now and congratulate her. That's awesome.
I didn't realize either, I keep up on her updates and all that stuff. I just didn't realize that she had permanently relocated to New York.
Oh, I didn't know that either. I thought she was in Columbus still.
Yeah, no, she's in New York. She's looking for a CFO-ish type person. She's telling me to keep on the hunt, and I'm going to hook her up with Julian since they're both in New York and they can connect from a founder standpoint. So she's kicking ass and taking names, Mr. Singh.
I love it. Well, actually, I'll send her a note and give her the details of the recruiter we're testing out for healthcare stuff. Maybe they'll be useful for him too, or for her too.
There you go. All right. Well, we got to talk Google Chrome next week and maybe a little bit of Amazon, Anthropic, significant investment stuff to talk about. So all that, a whole lot more. You doing any traveling soon?
I'm here for the holiday. We did our, Thanksgiving this past weekend with the family, and then for Thanksgiving itself, we all kind of just hang at our own homes and chill. I'll be speaking or keynoting an entrepreneurship event in Des Moines, Iowa, December 4th for anybody that's around. So I'll be flying out there next Wednesday and coming back on that Friday. But December 4th or 5th, whatever that Thursday is, I'll be in Des Moines if anybody's around. How about you?
Yeah, I've got a few more trips before the end of the year. I won't be joining you in Des Moines, unfortunately. I've got Boston and New York and Vegas. Hopefully those are the only 3 left to finish out the year. Although, as we joke about on my other podcast, we always joke about, it's my last flight of the year. Like the next flight isn't, 10 days away. So
yeah, that's right. All right, man. Well, safe travels. Happy Thanksgiving. And we'll talk soon.
All right, man.
See ya.